Hello, hello, hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing today? Ladies and gentlemen, this is by far an important live we're going to be talking about. Now, what I've done is I break down the financial statements whenever I have some time, and every time I break them down, I find little nuggets here and there. Now, I've saved the EBITDA talk because I don't really look at EBITDA, but it tells a story. And this story is a very damn good story. Okay. So we're going to go ahead and talk about this because it's a very bullish story. Okay. So what's going on? Club to retirement. Sunday fun day. Al, tell me something. I'm probably going to miss this one tonight, but I look forward to watching in the morning. Best wishes. See you in the morning. See you in the AM. Black shirt, a code. What's going on? Right. He has big news. Yes, you already know. All of our Al Stock Trades lifetime members already know, but I want to hear it again. Absolutely. So we've already discussed this. We've talked about it. And in the future, though, we are going to be limiting what we're going to be releasing to the public because at the end of the day, we want to have an edge. And, we're all trying to make money. So the amount of information that's going to be released, it's going to be very limited, especially when the stock gets to its intrinsic value. Okay. Because I want essentially dumb money to be able to buy those shares back. And I can't say to the public where, when, and where I'm going to sell at a specific price, right? That's going to be in our lifetime access, all the buys and sells of what we're going to be doing. Because in the future, markets will be, I think in the future, the markets are going to end up looking at our channel because we were the first people to have talked about this, especially when this explodes. Okay. So, and by then people will be priced out of lifetime access and we'll essentially close it down. All right. So so we have really big news. Have a day just catching up on the Discord. Absolutely. Lots of good stuff to come on in, right? Oh, yeah. I drank all my milk, right? I need to go get some more milk, guys. Michelle, did you end up getting more milk? Actually, she got some more milk. Holy shit. Right? What's going on? Dr. Patel's in the house. What's going on? Right? All Stock Trades members, right? Forever. All right. So we got something really good to do today, okay? So, very quickly, obviously, year to date, CLOV is almost at 0%. Really, nothing, no movement. Alignment is pretty much back online. In the past 5 days, it's been surging. Again, we want alignment to go up. We want healthcare to go up because if you think that if the stock, if United is down 40%, and if you think Humana from 5 years is down 40%. If you don't think that's going to influence the stock market, then especially Clover, then you're delusional, right? So we're going to go ahead and talk about those things. But really, the first thing I want to talk about is the iPad discussion. So we're going to go ahead and get some nice. This tea is from English. It has been imported from the UK, right? Shout out to all my UK folks. Okay, and we're going to go ahead and bring the keyboard to the left here because actually we don't really need the keyboard right now. And we're going to bring in the iPad here. Okay, we're going to just go ahead and see. We're going to test this discussion. Okay, good. All right. We're going to go ahead and bring this here. Now that I have the setup here and we're going to do the presentation, I need to be clear. Can you guys hear me? Is this clear if I talk like this? Do I have to have the microphone in my face? We changed and reorganized the setup a little bit here, so I'm not too sure. Can you hear me? You guys can hear me? Let me double check. Testing, 1, 2, 3, testing. Let me double check. Testing, 1, 2, 3, testing. Woo, nice. All right, we're good. We're good. We are ready to teach. All right. So what I'm going to do is we're going to talk about this presentation I have for you, and we're going to talk about this one. This is the one that you want to see, right? This is the bullish one, right? But very quickly, and again, this is the one right here. This is the big one. This is where we are all shocked when we were doing our due diligence last night on the lifetime access, right? So let's go ahead and actually open up this one, okay? And we're going to talk about, just very quickly, briefly, we're going to talk about the AAII survey, okay? If you don't know what this is, I'm going to explain. So this is a survey that's conducted by the American Association of individual investors. So what they do is every week they have a questionnaire and that they ask retail investors, and it publishes every Thursday. Okay, and it's U.S. based individual retail investors. Okay, and they ask them essentially a question. Okay, they say, what direction do you feel the stock market will be in 6 months from now? Okay. So it's a survey. They ask retail investors on what direction do you feel the stock market will be in the next 3 months? And the response is either they're bullish, bearish, or neutral. Okay. This is a volunteer basis. They don't get paid to answer these questions. It's self-selected. It's usually people that actually understand the stock market, that, apparently, these are retail investors that act like they know what they're doing. They have some form of financial literacy. But this survey, a lot of hedge funds and people like us, we use them because we look at them as dumb money. So if you want to take a sample every week of dumb money, instead of going out to the bar, you can look at the survey. Again, I don't want to talk too much about the survey because I want to keep this edge that we have, because I don't want to educate too many people, because we need people to row the boat, right? Luckily, there's a lot of retail investors. They have a ignorance. So even if you were to tell them, they probably still think this way. But to be honest with you, I would rather keep this edge. So you're not really going to see me talk about this too much. Obviously, in lifetime access, you will. But in the public, I usually don't like to do this, right? Because I love to make money, right? And our channel's small right now, so it's not affecting too much, right? So if you were to look at the which factor is most influencing your 6 months outlook for the stocks, they asked the survey, 10% think it's valuations, 8.9% think it's monetary policy, 6.3% it's other, they're just bearish. 10% think it's corporate earnings, which is obviously stupid. That's stupid because corporate earnings has been great. Valuations, a lot of stocks are actually compressed now. Valuations are actually a lot better, right? Monetary policy, yeah, they're going to cut in 2026, because if they don't cut in 2025, they're going to cut more in 2026. So that's bullish. And then I can't factor this. And then tariffs and economy and inflation. Well, inflation's actually going down. Inflation's going down. If you don't recall the recent PCE, it was around the 2% region. It's good, right? In terms of tariffs, right now, Wall Street is pretty much fighting back Trump. So I think there's going to be a resolution with tariffs, right? In terms of inflation, housing prices are going to start falling. So all the people that are looking to buy houses, right? That's why that's why Wall Street folks like us, we tend to do really well in real estate, because we understand numbers. Redfin just published an article saying that they looked at the number of sellers and the number of buyers. Here's where sellers and here's where buyers. And the last time it had a gap this big was in 2016. Okay. And if you were to ask yourself, well, if housing starts to come down, what's going to happen to inflation? Right? Inflation is going to come down even more, right? So ultimately, the Feds are going to have to cut, which solves the valuation problem, monetary problem, corporate earnings problem, and inflation problem. So as you can see, these retail investors, they don't know what they're talking about. And when they're this bearish, It's actually quite good. Now let me explain to you. So here is the bears. So these are the people that responded that were bears. These are the unhappy people. These are the people that think the stock market's going to go down. Okay. This is the green line. Whenever the line goes above the green line, that's when you want to buy. Okay. Whoopsies. That's when you want to buy because that's equal to peak fear. Okay. Now, obviously, this is in 2025, May. This is like last month, right? Happy June, y'all, right? We're already halfway in the year of 2025. Holy smokes. Okay. Let me go ahead and double check to see. Okay, good. All right. So it's June, right? So you could see that the market bottomed here and they had peak fear. The amount of bears, they peaked. They peaked high. A lot of people in our stock terminal during that month, they were like, there's going to be a recession. There's going to be a recession. They're following the data of retail AAII too. They are part of these respondents, right? Which is equivalent to dumb money, right? I'm just trying to teach you, right? You came to learn, right? There it is. Peak fear, peak fear. Oh, recession. Oh, right? But hold on. Let's look at other indicators, okay? And when I say other indicators, let's look at other time frames. You remember the bear market of 2022 when Meta fell down to $70? Well, this is 2022 right here. And you can see the stock market fell right here and it bottomed. It bottomed here. And what did you have? Peak fear of bears. Bears were basically saying, we're going to die. It's the bear market. We're going to die, right? That's what they were saying. Just like they were saying here in 2025. Oh, we're going to die. Oh my God, it's a recession, right? Okay, so let's move now to the next slide, right? Now let's go ahead and look at 2020. COVID. People were actually dying, right? People were actually dying here. Terrible, right? So here's the bottom, and guess what? Bears were at it again. The stock market's going to drop. It's over. Bill Ackman came online. We don't know. This thing's killing so many people, right? He had a short on the market. Okay. So we had a bottom here. Bears are active. We had a bottom here in 2022. Bears were active. And now we had a bottom here in 2025. Bears were active, right? Al, that's only 5 years of data. I need more data. I need more proof. Okay, that's fine. Here's the 2008 great financial crisis right here, right? Here's 08. Here's the bottom, and here's the bears. The bears were at it again. We're all going to die. Peak fear, right? Peak fear is here, right? All right, well, they're like, Al, you're starting to make a lot of sense now. You're starting to make a lot of sense. Am I really dumb money? I just need one more data. Let's look at the dot-com bubble crash. Okay, that's fine. Here's 2000s, right? Here's the dot-com bubble crash bottom. There's the bears. Peak fear, right? Al, can you just show me the whole time frame and let me see when, dumb money was screaming for the hills as people like us ate their meat? People like us stole their money. Actually, we didn't steal their money. They gave it to us. They donated it. Thank you for your donation. Thank you for making me rich. Thank you for making me enjoy freaking beautiful tea. Thank you. Right? I appreciate you. Thank you for your donation. God bless America, right? All right. So now let's go ahead and let's take, right, I'm being pompous on purpose, right? I'm trying to get it through your thick fucking head. Right? I don't want you to be dumb like these people, right? I want you to make money. So now let's go ahead and let's basically take a look at this whole diagram. Okay? This was 2025. Peak fear, right? Selling stocks, right? Peak fear, right? Bottom. 2022. Peak fear. All hell is here, right? Here's 2020. Peak fear, right? Here's 2008. Peak fear, right? Here's 2000 and 1 and 2002 because of the dot-com bubble crash, bottom. Peak fear, right? And then what's this? What's this? What's this? This is the 1989 crash. If you zoom in, you see that little tiny drop. Back in the day, those people didn't have a lot of money. Wah, wah, wah. Right? Look at that. Right? But again, still peak fear. Right? Are you seeing this? Are you seeing this? I will not be talking about this anymore on the channel. Okay? I'm not going to be releasing information like this to the public because I got to eat. And there's a lot of other things that I'm not releasing right now to the public that we're keeping internal in our lifetime access. I got to keep my edge, right? I got to make sure I'll feed my family, right? I got to feed my dogs. You understand what I'm saying? These golden doodles, they like to eat. They like to eat meat. Right, buddy? He's eating some right now. He's eating some. What is he eating? Beef or chicken shawarma? He's eating some beef shawarma. That's my man right there. Okay. The point is we're not going to be releasing this to the public, right? So for individuals, while you still have an opportunity to dive into, take advantage. The sale will be expiring soon. Okay. Take advantage of our SAS coupon code, $1,200 off, and you'll be able to get access to all this information and the interpretation of this information and other information on how to basically read these market indicators. Okay. All right. So, yeah. So based off of this, you can see that's why I wasn't really stressed out because bears were essentially going rampant, right? And now they've slightly cooled down, but it is kind of rebounding a little bit. But they slightly shut up a little bit. Okay, so there it is. Okay, so now that I gave you this vaccine injection. You have this vaccine. It's going to go to your lymph nodes. It's going to swell up a little bit. You're going to get some activation of your T cells. Then your B cells are going to start secreting immunoglobulins and all these things. And you'll have it develop a adverse reaction. Whenever you see and sense fear, you will remember your T memory cells will say, actually, this might be a good buying opportunity. Okay. All right. So now we talked about that. Now you have the vaccine. Okay. Now we're going to talk about why we're here. Okay. I just wanted to put that vaccine in there for you guys. Okay. Which is why I've been buying, right? I dropped about 50 to 100K, $50 to $100,000 in stocks in the past month, right? Drink some water. All right. Do you understand? Let me see here. For people that don't, please comment down below if you understood what I just explained to you, right? Because there's no good, right? Please comment down below if you understand. I'm going to read these comments. Hold on. Whoops. I'm back. I don't know where I went.
Stock market always going to cause institutions need to move money, and 401ks need to invest that money.
Oh, yeah.
Crazy good news for people who know what to look at. It will take a retail a little while to figure this out while the whole time you load up.
Absolutely. No, I'm still enjoying this. Oh, here. All right, I'll trade you some. Michelle is such a nice woman. She got me this ice and a lime. You can't see it. And she got me some Toco Chico. So I guess let me pour this here. All right. Here, Michelle, do you mind if you take this for me? Appreciate it. Thanks. Oh man, that's very good. Some carbonated water. Let me wipe this out a little bit. All right, so just want to take a little break. All right. Excuse me. All right, so now that we went ahead now took a little break, right? So now let's go ahead and we'll talk about Clover right now. Okay, so let me go ahead and share the screen here, shall we? Oh, sorry. This is what is this? This is interventional radiology. I've been reading up on some stuff, right? So that shouldn't be there. Let me push this. Let me put this here, and let's take this and put this here. That's a lot better. Okay, it's a little organized there. All right, so 3 quarters, 3 versions, unpacking Clover Health's EBITDA story in 2024. Ladies and gentlemen, you're going to have to most likely replay this video 2 to 3 times. If you can understand it the first time, great. That's very strong. I'm going to go over this one time real quick because I'm going to try to enjoy this wonderful Sunday night with my significant other. Okay? All right. So in Q4 2023, we had Clover give their full year 2024 guidance. Okay. So in 2023, the last quarter in 2023, the end of 2023, right? 2023 finished, the 4th quarter, Clover gave their guidance for 2024. And they gave their guidance at an adjusted EBITDA from negative 20 to positive 20 million. Okay. In accounting, we use this number here. Let me make sure. In accounting, we use parentheses to indicate it is a negative number. So essentially, it's another say of negative 20 to 20 million. Okay, that's what that means. Okay. So they gave guidance. All right. So they gave out guidance. And they said negative 20 to 20. That was in 2023 Q4. And then in the 1st quarter of 2024, they gave out their guidance again. Okay. They gave out their guidance again. And this time, their old guidance, which I'm going to put, let's say in pink, their old guidance was from negative 20 to 20. For their adjusted EBITDA. Then they switched to their current guidance in Q1 of 2024 to 10 to 30 million. 10 million to 30 million of adjusted EBITDA. Okay. And you could see for the 1st quarter of 2024, they got about 7 million. And Q1 of 2023 was negative 38 million. So definitely markable improvement. So the 1st quarter of 2024, they said, you know what? We're going to revise our guidance that we gave. And this is going to be their first revision, right? This is going to be their first revision. Okay. And it's no longer negative 20. It's now positive 10. And it's no longer 20, it went up to 30 million. And then the 2nd quarter happened. And guess what happened? And this is where the big boom shakalaka happened. Okay. In Q2 2024, they revised their earnings again. This time, their previous earnings, and this is why I don't like it, how they put previous here, and they had previous on the right side. They switched it, right? It's kind of stay a little organized, right? It's fine, right? I get it. You're excited. You want to put it in stage in front. Their previous guidance was for their adjusted EBITDA, right? Their previous guidance was 10 to 30 million, right? Which was right here, right? This was right. So first they improved from negative 20 to positive 20, then 10 to 30 million, and now they're they went from 10 to 30 million to their new guidance of 2022 from 50 to 65 million. Holy hell. They went from 10 to 30 million to 50 to 65 million effing dollars in adjusted EBITDA. Now, why do I have this face? Well, that is a huge increase. That is just a huge jump. And guess what? This is their second revision in Q2 of 2024. Okay? Are you following me? You got to follow me. All this is going to add up. If you're not paying attention in the beginning, you're not going to understand the punchline, right? And then you're going to go in, you're going to look like a dumbass. You're going to say, oh, what does this mean? Could someone explain this to me? Right? If you cannot become successful in life if you have someone else trying to explain you something, right? You need to learn what I'm talking about, right? All right, so from second quarter of 2023, they went from 10 million to 36 million. That's an incredible improvement for Q2. And if you don't recall, the net income was around 7.41 million. And again, this is adjusted EBITDA. I'm going to explain what that means, right? They add stock-based compensation back into it to show you how much they actually made from total operations, okay? All right? So you can see what I'm saying here, right? So they upped it. They upped it by a lot. This is a 5x and this is like a 2x, right? They upped their guidance by a lot, okay? So then now we're going to move to Q3 2024. Whoops, what is that? In Q3 2024, they gave another full year guidance. This was their old guidance, previous guidance of 50 to 65 mil. And now their new guidance is 55 to 65 mil. What changed? If you didn't catch it, this is what changed. It went from 50 mil to 55 mil. They increased it. They're more positive, right? That they're going to end up getting higher. And in the third quarter, they went from 3 million to 19 million in adjusted EBITDA. Okay? Yep, you're calculating the improvement. The improvement, it's a lot. It's a lot, I tell you. So then now we go to the fourth quarter of 2024, right? Fourth quarter. And this time they give out their full year guidance for 2025, which is this year. Okay? Right? Now, very quickly, they went from negative 17 to $8 million in adjusted EBITDA for the fourth quarter. Again, not too much, right? But very good. And then their full year of 2024, they went from negative 42 million of adjusted EBITDA last year to 70 freaking plus $1 million. So they actually improved their guidance, and they actually improved their guidance and actually gave more than 65. No, they actually went to 70 million. So they actually did a lot better. So what is their guidance now? Because remember how I showed you, let's go back, how I showed you Q4 of 2023, they gave guidance for the full year of 2024. Now it's Q4 2024 and they're giving the full year guidance for this year. And what they did is, this is their guidance. This time they're giving adjusted EBITDA and adjusted net income. And it's 45 million to 70 million. Well, that's kind of weird. It's the same as last year's. That math doesn't make sense to me. Why is it the same as last year's? Isn't it supposed to be better? Could it be that they might revise upward again? Could it be that next quarter they might do an upward revision? Could it be? Could it be? Again, are you starting to see where I'm getting at now? let's go closer. Let's go deeper. Okay. Also, what's funny? There's so many haters out there that for some reason they are not comfortable with someone else's success. And they talk so much shit, right? But yet I guarantee you they're watching our video right now trying to learn this information. And it's like they I don't know if they have autism or some type of issue, but it's like they're like they bite the spoon that feeds them, right? And it's very funny. They're like assholes and they're haters and then they come here and they watch our research. Isn't that interesting? Very weird set of people you can find on the internet. Incredibly weird. Really weird, right? All right. I just wanted to add that. Okay, now let's go to Q. Just very quickly, let's sum up everything. Okay. So now they gave us the guidance, but now let's just, add everything for 2024. So if we add 7, 36, 19, and 8 million together, you get 70 million, which is exactly what we got here, right? They did that for us, right? And now if we go ahead and look at, again, this is Q1, they got 7 million, which is what we put here, right? Second quarter, Q2 2024, they got 36 million, which is what we put here. 19 million here for Q3 2024, which is 19 million here. And the fourth quarter for 2024, they put 8 million, which is what we put here. Again, just trying to show you, right? And if we add all of these up together, you get $70 million, which is exactly what we got here. Again, this is just as a slide, just to basically put all of you guys on one page. Okay, so now you understand kind of what we were doing. And yes, this PowerPoint slide, this presentation took me a while because I was taking from literally 5 to 6 different PDFs and slides and conglomerating it to you to be able to give it to you in a very appropriate educational manner. That's better than any college, better than Harvard, I can tell you, right? Because Harvard, you come out with debt. When you come out of my institution that I created, my academy, you're going to walk out a multimillionaire. That's the difference. Okay. All right. So there it is. So what did they start with? They started with, what was their original starting? Let's go back. They started with a guidance of -20 to 20. So pretty much if you sum it both, 0. They started with a 0 guidance, -20 to positive 20 million, right? Okay, so, and they went from 0 guidance to actually giving us $70 million. And it took 3 revisions for that to happen. So now, let's go back. So in Q4 2024, they gave us this. So let's see what they gave us for Q1 2025. Unfortunately, I didn't add that in there. Let me just show you. And it's honestly going to be a lot better if we do this. So let's go to quarterly results. Let's go to this one. Let's go to this one. And let's go all the way up. And let's go here. And let's just take a nice little screenshot here. And then we'll go here, here, and here. Okay. So last year, Q4, they gave us 45 to 70 million. And then this year, in the most recent quarter, their previous guidance was 45 to 70 mil. They upped it now from 45 mil to 50 mil. You see how they're playing the same game they did before? Not too much improvement, but 50 mil. So that's their first revision. I think we might get 2 more revisions, ladies and gentlemen. I think we might get 2 more because that's the first one. That's the first revision. Okay. So now that we understand that now, let me just write this out here. So in Q1 2025, their previous guidance was, 45 mil to 70 mil. Current guidance is, what was it, 50? What was it? 50 mil. 50 to 70 mil. The one that they increased was this one. They increased this one. Okay. Now let me explain to you something. This is this here. This statement. This here is the big one. Okay. Are you ready? This is the big one. Okay. Now, here's Q1 2025 financial performance. Michelle, can you please excuse the dogs? Because I need them to listen to this. I don't want to have any distractions. Okay. So here's adjusted net income and here's adjusted EBITDA. Last year in Q1 2024, there were 6 million. And for adjusted EBITDA was 7 million. For Q1 this year of 2025, they were 25 million. And for Q1 2025 here for EBITDA, there were 26 million. Okay? So so again, these are non-GAAP, okay? So what was the actual net loss of Clover Q1 2025? Let's put this in the upper right? So in Q1 2024, they lost negative 19.17 million. In Q1 this year of 2025, they lost, you guys should remember this, just happened, negative 1.27 million. So you see that big improvement, that should make you happy, right? But if you do their adjusted EBITDA, which I'll explain what that means, that's adding back stock-based compensation. Michelle, if you can, please, Michelle, okay? All right. So why do I have a thinking brain? Why am I thinking? Because watch and learn, okay? Can we add a page? Let me see if I can add a page. That's fine. I don't need it. That's fine. All right. Let me that's fine. First, let me erase this now. So I already explained what this means. Make me my space, okay? Okay. Are you guys following me right now? Because I'm about to explain something, okay? So, no, Michelle. Thank you. No, Michelle. Okay, so what is their current guidance this year? Their current guidance is, I'm going to rewrite it out. There's no confusion. Current guidance, okay? $50 million to $70 million. Well, that's weird. Q1, what was their guidance now? 25 million here and 26 million here. We'll take the lower one. We'll take the adjusted net income one. That's 25 million, guys. Already in the first quarter, they already got 50% of their freaking guidance for the freaking full year. Does the math make sense? It's already been 3 months into Clover, and yet we've already achieved 50% of their guidance for the full year, which means that they're going to most likely have to revise. But Clover answers this question. Clover talks to us. They give us hints. Andrew Toy says, and Peter say, Al, this message is for you. And this is what they say. They say, I'm going to highlight, significantly increased year-over-year adjusted net income, which is talking about this 322% increase, and the adjusted EBITDA, which is the 279% increase, is the result of strong Medicare Advantage, MA, performance, well-managed member cohorts, differentiated ability to better manage the total cost of care via technology. Technology. Clover fucking Assistant. Okay? And continued focus on SG&A optimization. So you can see they're telling you, yes, we know. We know that there's a significant increase. This is a huge jump. This is a huge boom shakalaka jump. This is a big, big, big jump. Huge jump. Huge. And the reason why, it's because of well-managed cohorts, differentiated ability to better manage total cost of care, and our technology, and the optimization of SG&A. So because they were better able to manage cohorts, because of their technology, are they going to revise? Are they going to revise guidance again? Will there be a second revision? Will there be a third revision? Are you understanding what I'm saying now? Because the first quarter of 2025, they got 25 fucking million in adjusted net income and 26 million in adjusted EBITDA. When they're guiding for the full year, 50 to 70 mil. They got 50, they got literally half of 50 mil already, which is here. Are you understanding what I'm saying? Please comment down below and say, I understand, so I can move on. Do you understand this? This is very important. It's in the title, right? This is very important. It's very important. Okay? So what this tells me is that they might revise again, but there's 3 different pathways. Okay? So there's 3 different pathways, and I'm going to explain. You understand. Excellent. Excellent. Let's move on. Okay? So now let me explain. There's 3 pathways now to this. Pathway 1, and I think I'm more in this camp, right? I think they're going to revise guidance upwards. They're going to revise guidance upwards. Pathway 2, I think we're going to get a subscription as a service SaaS added on, which is going to help revise upwards. Option 3, this is the bear case. Because we got the majority of our adjusted EBITDA and our majority of our adjusted net income in the beginning in Q1 2025, that means Q3, I'm skipping Q2 because I think it's going to be positive. Q3 and Q4, I think especially Q4 is going to be negative. Is going to be negative. Womp, 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 right? But I don't think it's going to be 3. I don't think it's going to be the third option. I think it's going to be either the first or the second option. Why do I not think it's going to be 3? Well, let me tell you. Why would they give us this message? Significant increase year over year. They're telling you that this is above than what they predicted. And I think maybe they underpredicted on purpose. Rather revise upwards than revise downwards. I mean, just look at UnitedHealthcare. They don't even have no revisions. They suspended all guidance. The analysts are flying blind right now. They don't know what the hell's going on, right? So I think I'm about 75 to 90% positive that they're going to be revising earnings upwards in Q2, just like they revised earnings upward in Q2 when I have the big little mouth open here, right? And me basically yelling, Clover, right? Because in Q2 in 2024, what do? They went from 10 to 30 million and they revised upwards. You see that? I think that's what's going to happen in Q2 2025 because it happened last year, I think. Okay, and then some Joey here. I think Clove has intentionally been conservative for a few quarters now. Their CFO did his job and helped Clove figure out how to right size, and now they're laser focused. Exactly, laser focused on what? What are they laser focused on? Great segue. Right? They're laser focused on what? The next phase is growth. It was all about profitability from here, and now it's going to be growth. Now, very quickly, let's go ahead and talk about this, okay? Very quickly. So for Q1, it was 6 million for 2024 Q1, and that's because because of the stock-based compensation is 28. Then for Q2 was 36 mil, and stock-based compensation was 27 million. And for Q3, it was 19 million, and stock-based compensation was 27 million. Again, we already talked about these here. These are the numbers 7, 36, 7, 36, 19, 8. That's what that is, right? Right? 7, 36, 19. And then this one here is 7, or, we rounded up to 8, right? And it's because of the stock-based compensation. So what I did was I added all the stock-based compensation in 2024, and I got $114 million in stock-based compensation, 114.33. And then what I did is I went to Q1 2025, and they got 25 million, which is way higher than what they had. I mean, this is literally up. This is up by, let's just do the math here. Let's do, 25 point. I'm just going to do the calculator here, guys. What am I going to, hold on. One moment. 25.782 divided by 6.820. That's about 3.7x the revision upward. Now, again, I don't know if that's going to happen for Clover on all counts, but if that's the case, we take their guidance, 3.7, right? We take their guidance here. This is like dirty math, but if we take this 50 to 70 mil, and if we take 50 million here and say, times 3.78, and then we take the 70 mil up here times 3.78, they might revise 50 times 3.78. They might revise it to 189 mil, to 70 times 3.78, to 264 mil. Again, that's like way bullish for me. So I would say let's be humble. Let's say 90 mil to 130 mil. I would say that's a pretty good revision. They can revise again up for the third time again. Now, again, that's a lot. That's a lot of money, guys, right? I think this would be more in line because they might have some unexpected cost from the new member cohorts that they have. Again, I don't know, because if you look at it, the BER is, has been, it's up there, which is, I think, around an 81% MCR. Okay. And who knows? They might even revise this one downward. Who knows? Okay, so you could see the revision is quite insane. But what I did then is I took I took stock-based compensation. What is this? I took stock-based compensation and I found the net percent decrease. And stock-based compensation decreased by 8.20% from last year to this year. So then I took this same percentage of stock-based compensation decrease and I decreased 114.33 million, and I got 104.95 million, approximately 105 million. Add another 3 million to it. Let's call it 108 mil, okay, of stock-based compensation for this year on average, right? We could just say 27 million per quarter of stock-based comp. Obviously, it's a lot lower than that, but again, it's better to overshoot than undershoot because it's good to be conservative. So you can see, again, there's a lot of financial analysis here. And, a lot of people that are, on Reddit and whatnot, they most likely don't, they're new investors, and which is why I created the software. You can see behind me here. I created the software and I created this YouTube channel to show you how someone is able to lock in on a stock, find an undervalued. First off, my platform teaches you how to search for stocks through a stock screener and find undervalued companies. And then it's about honing in. And you can see from these videos how you hone in and lock on a scent like a dog, and hone in like a lion chasing its prey, and lock in and know more than even the analysts that are on Clover Health, earnings call. Okay. All right. So there it is there. What else? Here's the next phase, which is like I said, growth. They improved guidance. I think they're going to have to improve guidance again because of this comment here, this significant increase. This is all from their PowerPoint. I just kind of took some their PowerPoint deck. You can see how the adjusted net income is increased by 322%. And if you don't recall from our prior discussion, using our example of imagine if these were the shares, the total shares of Clover, breaking something that's complex down into understandable analogy, you could see that even if the revenue increases by a certain percentage, even if the revenue increases by 25%, you can see the net income is increasing by 225%, and then 88%. The net income increases higher than the revenue, right? And that's just kind of how exponential growth works by looking at that, right? You can basically see, 25%, right? From the net income wise, net income is going to be higher. And you can ultimately see that even if you have revenue growing 25%, you could see net income actually grows much more. And, if you don't believe that, well, stay poor. Well, what am I going to tell you, right? You could see it here. If you don't believe that, you see it right here, 322% increase, and you see 279% increase, which falls in line with our example that we were giving you here. Okay. I'm trying. Okay. So, there it is. So we have that. Then the beautiful part is 2026. Everything that you see now is only going to get better because you have the 4-star payment. Because right now they're advertised at 4 stars, but they don't get paid as 4 stars. They're getting all this is happening with 3.5 stars. So I think we're definitely going to get the profitability next year, right? And then you also have the rate notice increase. They talk about that here. Yeah, here's the rate notice. You can add that there. That's that 9% increase. Plus this 5% increase, there's your 14% increase. So, what I find weird is that we calculated from our projections $37 million of positive net income for Q2 of 2025 this year. Now, if you subtract, again, I don't know. Because last year was 36 million of adjusted EBITDA. And if you take 36 million subtracted from 26 million, 27 million, you end up getting that positive 7.41 of net income, which is why they were GAAP profitable on a net income adjusted basis. My thing is, if they're going to grow to 37 million this year, and if you add another 27 million because of that adjusted net income, that's $64 million in adjusted EBITDA. If you add 64 plus 25, that's 678. That's $89 million already. If you add the 25 plus the 60, that's already 89 million. That's above their guidance. So they're going to have to revise upwards. Again, that's like 3 pathways. Either they revise upwards or they introduce the counterpart SaaS, which then they're going to have to revise upwards, or they're going to have to go ahead and it's a negative net income and negative in Q3 and Q4. I don't think that's the case. I'm about 90% sure now they're going to revise upwards. I just don't see it. I think they're going to revise upwards, and this is where the mismatch is, guys. This is how you make money on Wall Street, is when you find mismatches. I've been finding mismatches for the past 14 years, going on 15. Okay, I've been finding mismatches for a long time. I'm really good at that because I'm a scientist by heart. I'm a scientist. I do data analysis. That's what I do, and that's what I'm teaching my lifetime members, how to be like that, right? How to do that. And then they're going out there finding companies that, every day they find a company that explodes up. They're doing great. They're doing great. Okay. So there's that. So let me make sure I got everything here. Oh yeah, shout out March 13, 2024, Clover Health's remarkable turnaround, deep dive into 2023. I published this on Benzinga not too long ago. And it's funny, a month and a half, the stock exploded. So that's pretty cool. This is our company. We went ahead and did a nice article. I don't do many of them because I did, YouTube. I like YouTube. Also, very quickly, Treasury prices are going back up, meaning the bond yields are going to go down. I think these are more bond vigilantes. And again, a lot of retail investors don't know what that means. So that's the edge I have as they're bearish. I understand this, and I understand the long end of this. So I make money off of their bearishness, right? Here's the new age of AI. You're going to get into something called recursive self-learning. And that's when Kevin is able to build Counterpart, where it's going to automatically learn on its own. And it's able to go out there and be able to find discoveries in patients. Hold on. I dropped my pen. It's going to be able to go out there and find, recursive self elements, and potentially find a new way of looking at a disease that medical school didn't teach me. Right? What else? We're going to talk about this on another live regarding the All In podcast. Very quickly, he's wearing Brioni. This is, this thing costs like anywhere between $600 to $1,600. And then, the reason why I want to mention this really quickly is we'll talk about have a nice deep dive discussion about this. But let me just kind of pound this in real quick, just really quickly for folks that are interested. If you go ahead and draw this out and draw this here, and if you go to the 70s to 80s, and if you go to 2025, and you look, let's just move this here for a sec. If you look at the poor versus the rich, and if you go ahead, this is 2025. This is the poor versus the rich. Back in the 70s and 80s, what differentiated the poor versus the rich? Well, a lot of the rich, they had access to computers, right? They had access to cell phones, right? They had access to Wall Street, right? In terms of brokers, it used to cost like $30 to $50 to essentially buy out a company, like just to buy a share of a stock. So there was a lot of differentiation between the poor and the rich. There was a lot, right? And people felt it. Right? Now, if you compare the poor versus the rich now in 2025, what do the rich have that the poor can't have, right? You guys now have access to computers, right? We have access to fast internet, right? We have cell phones now. We have the internet and computing capabilities that allow me to use this, M3 or M4, whatever Mac I'm using, right? To be able to use this high-speed internet connection through the Cable 8 systems and have this amazing microphone right? That I mean, go back in the day and tell me how much YouTuber going on YouTube was very expensive back in the day. Your computer with video editing needed to be at $10,000, $15,000. Go look at the original Mac Pro. That the big one, right? That was like $40,000, right? It could go up to 90,000, which was insane. I was thinking of getting one. Thank God I didn't. Right? And the Mac Studio came out, and they like blew out the whole thing. The point is the differentiation between the poor and the rich now, the gap is narrowing, right? Now we have Robinhood, right? Right? And then Webull, right? And then Robinhood now has zero commission trading. The point is that what do the rich have now that the poor don't have? I'll tell you, right? They have, private jets. They can charter a jet. What else do they have? The jets. They have a club, a country club, right? Didn't David Sachs and Chamath Palihapitiya create a Georgetown executive club for an entrance price of $500,000, right? So what? Right, with Don Jr., they got their clubs. And then what else? What else do they have, right? Oh, of course, they have this thing called Brioni, right? And let me explain to you. Chamath Palihapitiya said, you see, he was like, oh, I can tell you what that is. Is that Brioni? And then David was like, yeah, it is. And then Chamath said, you see, it shows you how many years I've been rich, right? And you see how, again, he's attaching his whole life's meaning and his life's work and his identity to his wealth. And the point that I'm trying to explain to you guys very quickly, the point that I'm trying to explain to you is these people, the rich now, because back in the day, they had access to computers, they had access to, cell phones, Wall Street. Well, what do the rich have now? Their private jets, their chartered jets, their clubs, and their Brioni, right? And that's their identity, right? And also their cashmere sweaters, right? Their cashmere sweaters, right? That's the identity they have, right? You understand what I'm telling you, right? And it's a false prophecy because they're surrounding themselves with material possessions. And, back in the day, you could say, well, hey, Sayin Patel is saying, well, it's connections. Yeah, of course, the club gets you connections. But guess what? Our lifetime access also gets you connections too, right? You see how now you can also have connections very quickly? The internet is allowing you to be able to connect from other people, other places around the world, right? We have people that have over $5 to $10 million in our platform. You understand what I'm saying? Right? When someone purchases lifetime access for me, you get access to someone who has over $15 million of net worth. Where? Tell me where and when in the past did you have access to this? Right? So the point is right now the gap here is starting to narrow. Right? Because guess what? Back in the day, it was very difficult for me to communicate to you all about stock market evaluations. And guess what? Now we have our own software that is able to calculate price targets for you. Right? You see that? So the gap is overall narrowing. And what this happens is you have these rich folks now that the only meaning that they have is being, because they need to divide themselves from being poor. They don't want to be poor. They don't want to be associated with people like us. So what they do is they try to wear their nice jets, their yachts, their clothes to separate themselves. But you know what's funny? In the next 5 to 10 years from now, to 20 years, artificial intelligent robots are going to be able to make Brioni style t-shirts at a very designer level, right? And then Brioni prices are going to go down. So then what are these rich folks going to do? They're going to have to find meaning in something else. And it becomes a constant cycle of trying to find meaning. When in reality is real meaning in life is the family that you're surrounded with by right now. For me, it's the beautiful dogs, my significant other. That is the purpose of life. Not these esoteric possessions that are meaningless, that are the byproduct of an ill capitalistic society. You understand what I'm saying? The real benefit of money is not being rich per se of material possessions and this bullshit Cartier. No, it is in due in part by being able to be financially free, being able to do whatever you want, to be able to go to the beach and afford a property on the beach, and to be able to enjoy the nature that should come freely, but it doesn't, because we set these arbitrary land elements that restrict people from coming based off of money, which is not a natural process of how the world works. Right? So that's what I'm trying to teach you. It's just a different level of philosophy, right? Again, I've touched the brain, right? I was able to, remove a tumor from the brain. That was really cool stuff, right? When I was able to get in the OR, right, and have some experience, right? And I have a degree in neuroscience, so I understand how these people think. And I'm just telling you, don't fall ill into this. When David Sachs specifically says any man above 50 should have a Brioni. Now, again, you don't even know if under the radar, these people, Brioni probably reached out to them and they're able to get free Brioni shirts. Again, you don't know this. You don't know this because there was a study that came out that specifically stated that the poor consume 75% of the designers. Poor people consume 75% of designer, right? So instead of trying to buy a depreciating asset, ladies and gentlemen, you should be able to buy assets to help with your retirement, right? So again, the whole point of this channel is to help you break out of the matrix, okay? Right? There it is, JS. Very correct, Al. Family, God, fellowship is important than money. Absolutely, right? So that's why, forgive me. That's why I had these screenshots here. I just wanted to show you guys this. Yeah, that's about it. And then we'll go ahead and calculate intrinsic value later on. But ultimately, guys, if this is the case, and if we get the profitability like this, I would be very surprised if in the next 3 years, we're not above $20. We're not above $30, to be honest, right? So lots of money is going to be made. And by then, lifetime access will be over $20,000 because, again, the information that we're teaching and the data that we have is incredibly expensive. And the people that we have, try getting access to a country club that has millionaires. You just can't. We have a net worth with a 30% response rate of over $45 million now, right? As our assets continue to grow, we're going to get close to the billion, right? So at the end of the day, you decide for yourself, what do you want out of life? You want to break out of the matrix? You want to be financially free? You want to be surrounded by like-minded people that help, that care about you? That's the community that we have, right? So take advantage of our coupon code SAS, $1,200 off. And let's see what we have here. Dilution from the stock-based compensation. Perfect. Yeah. It depends because you also get increases in potential income depending on what your evaluation is. You're just diluting the stock price, but there's free cash flow and there's other metrics, right? Okay, there it is. Excellent reminder. If people respect you for your possessions, they don't respect you. Exactly. And that's the whole point of this, right? Because as we proceed, because again, I'm very lucky. I went from having absolutely nothing to having absolutely everything, right? You know what I mean? So, holy crap. I'm getting Las Vegas reaching out to me to get a private jet to take me from here to Vegas, right? Holy crap. The life I'm living is insane, right? But I have to remind myself because I was able to get a vaccine called poverty. I remind myself of what really matters, which is money. Because you can have millions of dollars. At the end of the day, if you have pancreatic cancer, God forbid, and you're staring into the eyes of death, where no amount of money will save you, you'll start to realize that the most important thing you have on this world is time. Okay? Right? So that's all I have for you guys. I appreciate you. God bless you all. I care a lot about you. I want you to learn and grow and be able to not be part of dumb money and to become smart money. And I thank that person who created the internet. I thank Tim Cook for giving me this strong Mac. I think these, these folks here for making a very great microphone and a great iPad and great computer systems and camera. So I can go ahead and obviously YouTube. So I can go ahead and communicate this to you, right? Because I'm just here. I'm in a living room right now communicating this to you, right? How incredible is technology? Okay. So God bless you all. I'll see you on the next one. Peace out.